Hello, everyone. Welcome to the next algocloud live session. Today it's special topic. It's about battle of edges, and I'm glad to welcome here Michal Zaremba, our today's guest. Hello.
Hello, everyone.
And Thomas, my friend, who is also joining us today.
Hello, traders.
So. In the end, Mike will have presentation and show you quite a very interesting topic. And after this, I will share with you some special offer dedicated for this event, and also some maybe mandatory info that nothing from this session is can be considered as trading advice. We are just showing what we do, but everyone has to find his own style. So once again, hello, Mike again, and I'm looking forward to what we have today for us, Mike to Mike.
Okay, thank you. We have exciting session today because the fight of two well-known and big players, different styles. I can tell you only I am fully prepared to the fight. But let's start from the part of comparing these two players. What you will learn today, you will learn two complete strategies. One is trend following, the second one is mean reversion. Both are beating the market. You will get all the rules. They are ready to deploy right after the meeting. And you will recognize key differences and components of these types of trading. We will look together at performance metrics, equity curves, drawdowns, KPIs, and that's all we'll be looking at 20 years of out of sample period, because we will look at the players, they were discovered many years ago. And we will discuss also the combination methods to practically use these approaches. And who are the players? Who are the players? The players are the different styles. This will be a comparison of these two different, completely different trading concepts represented by these people. Nick Reg is a great Australian trader who focuses on momentum and trend following, author of many books, and we will use the best strategy from the book Unholy Grace as representative of this style. On the other side, we have Larry Connors, well-known Larry Connors, and his specific use of the fast RSI. Although the RSI was invented by Wells Wider in the 70s, the fast RSI was popularized by Larry Connors, and this book was written together with Cesar Alvarez, whom I know personally, and this is a great trader also and educator also. And what are the key differences between the trend following and mean reversion? First of all, trend following, it capitalizes on existing market momentum. It buys assets as the price are rising and sells when the trend is over. This style is confirmed by numerous academic studies and many decades of trading. And mean reversion part is based on the different principles, based on prices returning to the historical average assumption. And these styles identifies the asset that have deviated from the average price and exploits temporary price overreactions. And the core philosophy of mean reversion is to buy low and sell higher. And on other hand, the core philosophy of trend following is to buy high and sell even higher. Okay. What are the rules of the battle? We will use the same universe, and all tests are done on S&P 500 stocks, all S&P 500 stocks, current and historic. We will use the daily time frame only. We will use long only position type. All entries and exits will be on market close. Thanks to algocloud, we have ability to use this very powerful entry and exit technique. The date range of my backtests was last 20 years, and this is out of sample range because the strategies I will introduce in a while were invented many years ago. And the verdict will be the numbers, no opinions from my side, just at the beginning, okay? And we have some data caveats we need to take a look. All backtests were done with assumption of the commission 0.1% of commission and slippage. This is something I'm using because we are using Alpaca broker, and this is something really working with this broker, in my opinion. All backtests are taking into consideration the survivorship bias. That's why backtests include current and historical index constituents. But we need to be aware that past is not future, and historical performance doesn't guarantee the future results. And you can find the full disclaimer at my website, algohub.com. My backtest settings, testing S&P 500 data, but you need to backtest, and you can backtest also different universes, and the backtest results will be different if you will test another universes. In general, this concept will work on any market, in my experience, but the small differences will be for sure. And all my backtests are starting in this battle. We'll start with percentage-based money management, and we are starting from 100K. And all backtests are done with the latest SQX version, and the same backtester is available, of course, in algocloud also. Okay, that's it. And KPIs, we will look at CAGR, compound annual growth rate. It is percentage based, how much money we are making using this strategy. The win rate or hit rate, the payout ratio, very important measure. Average win versus average loss. It will be huge differences here between the strategies. What is the open drawdown, max loss from the peak? What is the return to drawdown ratio? What is the exposure? How money the strategy is using in the market? What is the number of trades, of course, during this period, and what is the cost sensitivity of each strategy? I will share my insights here. Okay, let's start from the player number one, trend following. The easiest analogy I can come up with trend following is being the hitchhiker. We don't predict the market, we don't analyze stocks, we don't use any fundamental analysis. For the profit to be made, the price has to go up. As the trend followers, that's all we care about. Take a stock and follow the price trend. This is said by Nick, and I can agree. He's the trend master for me, and that's it. And what is the trend? The trend we can easily spot on the chart, and even children will spot the trend, of course. This is the Google right now. Google is trending, definitely. And using such trend, we can exploit many different trading strategies, trading styles. This is one of the style. This is the turtle trend style. We take a breakout and we sell a breakdown in short terms. Okay, this is not the strategy we'll use today. We'll use different strategy, but to say that there are different ways to exploit the trends. What is the problem with trends? The problem with trends is that they are not exist all the time on single instrument. They are existing from time to time on single instrument. That's why we need to use some measurement of momentum and pick only the stocks with the higher momentum. For example, in the previous slide, we had Google versus Meta. Google have a positive momentum right now. In last, I don't remember, 6 months maybe, and Meta have a negative momentum right now. Okay, and this is the comparison of Google with other stocks, with Costco, with Microsoft, with Booking. You can see that Google is doing very well if you compare it to another stocks. That's why we need to have some method to measure this trend, this momentum, and to put this component to our strategy. And you can do it in many ways. We will use ROC, very easy to understand and to implement. ROC, it is rate of change. It is percentage difference between point A and point B. And in our example, the Google is measured. And this is 3 months momentum. Okay, and what can we do with it? Because this approach is very simple to spot on the chart, but it is also very difficult to track on daily basis and to make decisions based on that. Thanks to algocloud team, we have algocloud now. And this is something game-changing in my opinion, because we can use this list of stocks and this momentum indicator inside our strategy as a ranking method and the position score method. And how the algocloud is seeing this list is seeing simple. It is ranking the current stock list by the change of last 3 months rate of change, for example, and it is taking only, let's say, 15 stocks on the top of the list, the most growing stocks. Okay, and this is the ranking method, or we can call it also position score method. And if I'm talking about trend following, for me, this is long-term trend following, and this is the same like momentum. Okay, I can tell today about trend following, momentum, it is the same. I'm not using any rebalancing method. This is different style. We can discuss this style, also very interesting style of trend following. But today we will discuss and we'll follow the trend following and momentum approach. Okay. Maybe it is the time to uncover our first candidate, but I would like to ask you first, what type of strategies are you using now? Please type 1 in the comments, maybe, if you are using trend following, and type true in the comments if you are using mean reversion, okay? In the meantime, I will show you the first candidate, and the first candidate and our first player is the BBO strategy. This is the best strategy in my opinion from the Unholy Grace book. It is programmed using StrategyQuant. The same logic, the same editor is available inside algocloud, of course, and we can look at this strategy together using StrategyQuant. Okay, what is the strategy logic here? As you can see, the strategy is very simple. We will take a signal when we will have the close above the Bollinger Bands, okay? And for now, we can see the logic on the chart. This is the Bollinger Bands, and the Bollinger Bands is for entry and for exit also. But the differentiation here in the strategy is this one, that we are taking the different standard deviation for the upper band and different standard deviation for the lower band. The look back period in our case is 100 days, the Bollinger Bands of 100 days. And we are taking the upper band and we are entering the trade when the close price is above the 3 deviation up of the Bollinger Bands, okay? We are using SMA here. We can use also different moving average, but for now we are using SMA, okay? And what is important in this strategy, we are entering on bar close and we are exiting also on bar close. This is the first statement, close must be above the Bollinger Bands, these settings of Bollinger Bands, okay? And the previous close, the day before, should be below, okay? We would like to take only the breakout, not few days if the price is moving very high. We don't take these signals. Okay, this is the second condition, the previous day must be below. And the only filter I'm using here is the filter on the market. We are using two charts. The main chart is the stock and the second chart is the SPY as a market filter. SPY, S&P 500 ETF. And we need to be, the SPY must be above the 75 days SMA, simple moving average. That's it. If the conditions are met, we are entering, but at the same time, we are looking for up to 15 candidates. We will hold up to 15 stocks at the same time. And we are ranking these stocks. If there are more candidates in the same day, we're ranking the stocks using rate of change of last 30 days. That's it. And this is all our entry conditions. Okay, let's look at some examples on the chart. This is the famous one, Tesla example. The strategy bought Tesla in $20 for $20 and sold after many months, sold the Tesla for $200. Of course, this is an outlier. I would like to show these outliers because this kind of strategies are working and they are profitable because of such outliers. Okay, this is an example of winning trade and this is example of losing trade. Again, there is a breakout above the Bollinger Band channel and we are having loss here. Okay, the same observation we can have, of course, inside StrategyQuant. And this is another example of Lockheed Martin. Also, the trade is the trade was held by many months and profitable trade, not so spectacular. Okay. Let's go back to the rules. We are exiting also using the market order when the close of today will be below the lower band. And the lower band is one standard deviation of similar Bollinger Band period. Okay? The same Bollinger Band 100-day Bollinger Band period. Okay, that's all. And the only additional rule is the stop loss. We would like to cut losses if they appear. If the price is not going in our favor, we cut the loss. And we have the percentage-based stop loss here, 20%. That's it. Okay, we are taking 15 positions at the same time, and we are using the second chart to filter the trend and to take only the trades if SPY is going up, if we have the uptrend on the general market. That's it. And what are the results? The results are really good. We are beating the market. We are testing last 20 years because we are talking about strategies are developed over 25 years ago. And we are testing only since 2005 to test the out of sample period. And in this time, we had on the US stock market, we had about 500 trades. Winning percent is above 50%. And this is really great because in my experience, the very good momentum strategies can have 40% win rate. This is not a problem because the key of this style of trading is in outliers and in these metrics. What is the payout ratio? How much we will win when we win and how much we will lose when we lose. Okay, but the average trade is over 130 days. Okay, this is long-term trend following strategy. The open drawdown, maximum open drawdown is over 30%, and the CAGR is almost 12%. Not huge. Okay, you can say, I can expect 20, 30, 50% from the strategy. This is not the target, in my opinion. Of course, I can tell you that the same strategy will work better, even better, on different universe. For example, if you will use Australian stocks, if you use Canadian stocks, probably also, you will get better results, but similar metrics. This kind of strategy can work differently on different universes. Okay, this is the equity curve. And you can see now the red one is the open equity, the most important one. The yellow one is the benchmark. The strategy is beating the benchmark, and from 100,000, it made net over $800,000 in this period, beating the market. And you can see that the drawdowns are lower than the SPY, but not always. Sometimes you have such periods when the SPY is going up, and this kind of momentum strategies is not working in this universe. At the same time, it can work, for example, on Russell 1000 or another universe, but it is normal. In my experience, it is totally normal behavior. Okay, and what is important if we are judging this kind of strategy? There are some years I can call them monster years. Okay, monster. After COVID, the next year 40%. 2012, 2011, it was so not so best years for stock market, but 2013 almost 50%. 2009 over 50%, and at the same time, SPY was negative at the end of year. Then in some moments, this kind of trading is giving you amazing abilities. And in my experience, the best moments are just after the bear market. Okay, we can see that this strategy, and it was surprising for me, I can tell you, this strategy is a bit negative for this year, and the benchmark is 17% up. Okay, but I can tell you it depends on certain settings of the strategy. This is something we can consider. That's why I'm not trading only a single such strategy. I'm trading portfolio of such strategies, because I'm expecting that the strategies will take different stocks. Okay, we have only 15 stocks at the same time in the strategy, and if I deploy many such strategies, I can take, for example, Palantir. I assume it is not taken into trade list because it was outside of the S&P 500. But Palantir monster trade in last months, and it could be taken by another strategy easily. Even the same rules, only different universe. Okay, what is exposure? Exposure is a measure how much money we need and what is the money engagement in such strategy. And this type of strategies are engaging our money 100% in the bull market. In general, I can assume that this kind of strategy will take our money, and if some trade will be closed, it will be immediately in few days open the next one. But in the periods when the market is tanking, the strategy will go to cash and will not open the next positions until the market will not turn. Okay, and this period 2008 and many other periods, and the average exposure is about 86% here. Okay, we can summarize. What is the pros and cons of trend following. It is strong in the rising markets. It can deliver outstanding results in after the bear market years, and it can deliver even better results in smaller markets, for example, Australian markets. Then I know the results from the smaller markets, and I can tell you that, for example, the same strategy can deliver 25% there. We have not access using algocloud now to another markets, but I hope it will be changed soon. For now, this strategy can be successfully used in US markets, and sometimes it will deliver amazing results. Cons. Results can vary depending on which stocks you are picked. Okay, you can make the backtest from 2005, 2006, 2007, and you will get different results because of the portfolio. He will pick 15 stocks and will follow the stocks for a very long time, and depending on this universe or on the stocks list we will pick, we will get different results. But in general, this concept is very robust, and this is the main pros, in my opinion, for this kind of trading. Okay, results can vary depending on stock universe, can underperform in turning point. Definitely, this is natural for all following strategies. If the market will go down, these strategies will tank also, but tank a bit, okay, not tank very much. And higher exposure than most of my different strategies. Okay, are you ready to go to the mean reversion part? Do we have any questions in the chat or another comments?
Yes, I think it's almost 50-50. I would say the votes about the trading style. Yeah, probably more trend following traders here.
Okay, great.
Yeah,
I
but
can
we have
tell you
also. Mhm.
from my experience, there are two schools, and they are people, they are trend followers, and even don't touch the mean reversion part. And they are people, they love mean reversion, and the trends are too slow for them. Okay, but let's discuss and let's look at the numbers first. Okay.
Yeah. But maybe we can answer some question, because there is one. Hello, can algocloud be already used for live trading? I mean, whether it can be connected to the live accounts of various brokers, RoboForex, RoboMarkets, or interactive brokers. Maybe Cornel, if you can tell us about the
Sure.
current state.
Thank you for your question. And yeah, like there are traders who are already using algocloud for 2 years for live trading of real accounts. And the different brokers are at various stage. So the best preferred, or the broker with longer, not the preferred, but the longest connected broker is Alpaca. And there we have also the biggest experience. Then the RoboMarkets also is already available, and interactive brokers is available too, but only for US citizens right now. There is also TradeStation, but this is also mostly for US citizens. As for the non-US citizens, they have quite high costs for stocks. So yeah, it's already being used also by Michael. Michael is also
Okay,
trading.
I can highly recommend Alpaca. Try Alpaca by yourself. I was using interactive. I am using interactive brokers also, but for me, Alpaca is the number one for algorithmic trading, stock trading, and ETF trading now.
Okay, thank you for your answer.
Okay,
we can
more
continue.
questions?
And if you have guys any questions, please feel free to type to the chat. And Michael,
Okay, we'll
we can
answer
continue.
them. We'll answer them after the presentation. Okay, let's go to the second player. Mean reversion is the contrarian bet that prices extreme deviations from the average are temporary and will soon reverse. Okay, this is something like a rubber band. We can see sometimes that the price is stretched, and we, as a mean reversion traders, we are taking such trades even if they are looking as a falling knife sometimes, because we know that there is a high probability that most of them will reverse, and we will take advantage of that reverse. This is the main assumption. Okay, and we will use the RSI, very fast RSI strategy. It is RSI2 strategy. And we can see, for example, here the RSI, well-known and really powerful indicator, in my opinion, one of the best indicators in the space. And we can see that, for example, 10 is the threshold we are buying, and we are exiting when RSI is about 70 here. Okay, we are buying when it is below 10, and we are exiting above 70. Okay, what are the exact rules? First, the RSI, we are entering also with a market order on bar close, and we are exiting also on the market close. The RSI 2 must be below 10. This is condition number 1. And the close of the stock price must be above 200-day simple moving average. This is this very simple trend filter. Okay. And our scoring method will be different than in the last example. Of course, we can experiment with different methods, but for this one, we'll use the stocks with the lowest RSI 14. It is the standard setting of the RSI 14. Lowest RSI in last 14 days. Okay, and we'll take up to 10 parallel positions. Okay, we are exiting when the RSI 2, the same RSI, is above 70. Another exit method is the time exit. We are not waiting for more than 15 days. You will see the average trade duration is about 5 days. And the stop loss, we can use stop loss, as many of you know. I don't like stop losses. I like to, in this kind of strategies, but in general, I can recommend, of course, to use stop loss to be comfortable. I'm working with my risk management by splitting the risk by many instruments, very many stocks, and for me, the risk of single asset or single stock risk is minimized by this way, because I have so many positions at the same time. Okay, but for these purposes, I assume the stop loss, 30% stop loss, and that's it. Okay, what are the results of the RSI2 reversal strategy? First of all, we have over $1 million in profits. Okay, from 1,000 in this period, 100,000. Sorry, in this period, we made over 1,200,000. It means CAGR is almost 14%. It was almost 9,000 trades in this period. The winning percent is almost 70%. Open drawdown is about 33%. And the average trade is 5 days only. But the payout ratio is totally different than in the previous strategy. Because of high win rate, we can take this one, and the payout ratio is only 0.6%. It means that the average win, we can spot the average win here and the average loss here. The average win is smaller than the average loss. And this is natural behavior of reversal strategies. I have few examples in my portfolio, the strategies having the payout ratio above 1 and very high win rate, but they are trading not so frequently. This one is trading very, very frequently. Okay, and we have such results here. The yellow one is the SPY. The blue one is the closed trades equity curve, and the red one is the open trades. And you can spot the difference between these two concepts. The red line was above in trend following, and this one is below. Most of the time we are under the water, let's say so, but a bit under the water. Okay, this is not huge. And in trend following, we are not closing the positions, we are growing, and when we are dropping, then the trades are closed, and we are getting our profits and booking our profits here. Okay. When we compare the daily equity chart year to date, this year, this kind of strategies are doing very well. 17%, almost 18%. And you can see that almost all years are positive. Only one, 2008, is negative. And sometimes it is performing similar to the benchmark. Sometimes it is underperforming, overperforming. But in general, we can see that the strategy type is doing better than the market. What is a problem with this kind of strategy? In my opinion, the main problem was the technical problem, because this kind of strategy can execute on daily basis 10, 15 trades even. Okay, it depends on how many such strategies you are using. For me, it is placing my reversal strategies are placing 30, sometimes 40 trades a day. Okay, and this is something you cannot use by using manual method, any manual method, in my opinion. Okay, you can take sometimes trades on Apple, for example, on Google, but on the whole universe, it is too difficult to make, and you need to make it very fast when the market is opening or closing in our example. Okay, and in this moment, this is why we have absolutely unique technology in our hands, because this can be totally automated using tools like algocloud. What is the exposure of this strategy? And I can tell you this strategy is trading very frequently, but I took it because of to show you the style, and the exposure is 80%. But I can tell you that in my portfolio, I like to have the reversal strategies. They are using very low capital, and the exposure is, for example, 10, 20, 30, up to 60%. And different types of reversal strategies, mixing them is a great choice. What are the pros and cons? It is working in most market regimes. This is surprising for many of people, that long strategy, mean reversion strategy can work very well in bear market also. Not in the first moment when the market is tanking a lot, because if you are long in this moment, definitely you will lose money. We can play with these problems using another strategies in our portfolio, for example, hedging strategies, and hopefully we will have some live also about hedging. It is amazing stuff to add to your portfolio, but you can also use mean reversion long strategies to hedge the portfolio, different types of reversal strategies, but also very, very useful. High win rate, it is very good for the beginners. Okay, if you have the strategy, it is winning 70% of the time, you are more confident. At the beginning, it is very important, and I can highly recommend to start exploring mean reversion strategies at the beginning to check them, but to be cautious also, because drawdowns will be also painful, and this is part of the game. Okay, we have many trades. They are validating our method. Okay, if you are using trend following strategy, long-term trend following strategy, you will have, for example, a few hundred trades in last 20 years. But in this kind of trading, this kind of strategies, you can easily get even 100,000 trades in one strategy, because if you will use larger universe, if you will increase the number of parallel positions, you will get almost all trades, and it will confirm that the strategy is robust. It's really robust, and this is something I really like in this kind of strategies. And it can be adjusted to capitalize on various pullbacks to reduce exposure. This is something I would like to say. You can use limit orders, and you can play with the entry-exit conditions to get different pullbacks, not the very fast one, but also very extended one. Okay, but most of the time we are a bit under the water. But this is a bit. In my experience, this is only a bit. We are losing, but in close position, we are seeing that we are closing the winning positions very often. Okay, I prepared the comparison between these two the strategy types. What are the differences in this comparison? CAGR, trend following about 12% and mini reversion about 14%. Win rate, trend following 51% and mini reversion about 70%. Of course, we are talking about these two strategies. I can easily generate, let's say, produce, not generate because it is not automatically generated, okay? Show you 5 different strategies in trend following style and 5 different strategies in mean reversion style. And they will give us different results. But in general, this is some good representation of what we can get using these styles. That's why I picked these two, okay? Then mean reversion, usually you will get between 60 and 80% win rate, okay? In trend following, you will get between 40 and 50%. This one is a bit better than usual. Payout ratio. Usually, you are looking for very high payout ratio. In this example, the payout ratio is not very high, but in trend following strategies, you can get 3-4 times bigger winner than the loser, okay? Using different methods, but of course, you will sacrifice the winning percent. In mean reversion, this is the standard figure here, 0.6, but of course, you can get also some strategies, and we will publish soon the Bitcoin strategy. This is 1-to-1 average win and average loss, and the Bitcoin strategy is about 80% win rate. And this is different style, but this is trading very low frequently, okay? Open drawdown, about 33%, and the same open drawdown in mean reversion in our example. Return to drawdown ratio, very similar also. Exposure, okay, I'm counting return to drawdown based on the percentage-based backtest. We can count it and get much higher numbers if we make the fixed amount backtest, okay? But I'm fixing it to this kind of approach here. Exposure, in our examples, it is high in both cases. But I can tell you that in my experience, mean reversion should have much lower exposure, and we can produce many variations of this strategy with lower exposure. Number of trades, 500 versus almost 9,000. And what is the cost sensitivity? Because we are tracking the trend for a very long time. The trend following, from my perspective, is no cost because we have no cost sensitivity. We are using Alpaca, is very low cost broker, and for me, for trend following is 0.1% is nothing, and for mean reversion, this is high sensitivity, and you can definitely check the costs of trading. Because you will see that the same strategy, if you assume no cost, will give you much better results. And if you assume a trading cost, it will give you smaller results. This is something important to always take a look in mean reversion part, okay? And I would like to ask you, who is the winner for you? Type 1 is trend following, type 2 for mean reversion, okay? And we can wait for your answers now, okay? Are there some more questions?
Yeah, there are more questions, but I think the votes is already done. I would say it's kind of almost 50-50. Okay, guys, write 1 or 2 to the chat.
Okay. Trend following is 1, and 2 is mean reversion.
I will vote.
Okay. Thanks for that.
I like mean reverting, because for trend following sometimes the children are rising and children are old until you close the trade. So
Okay.
but yeah, maybe some limitation
for
in
that.
trend length. This is what I
Okay.
usually do, that I limit a little bit the length of the trade to not hold it for a few years. But usually it don't
Okay.
worse.
There is
It
a
becomes worse than it has to.
smart answer from Libor, I see. No winner, only together is victory. Okay.
Nice.
And I can tell you that you are the winner, in my opinion. You are the winner because you can start exploring this kind of approach, and you can start exploring these two strategies after the meeting right away. No problem here. I think really we are living in amazing times because we have technology behind us, and we can automate the process, because it was the costs and trading costs, and the automation was the missing part of this game. And trend following is much easier to track on daily basis and to trade. Mean reversion is much harder to do so. But from now, we have really amazing technology behind to do it. And what is my thought about this? What are my thoughts about this strategies? I like to combine. I like to take the best from all these words. I don't like to be fixed to only one word. And I like trend following. I like mean reversion. To be honest, right now I'm using mostly, I can say, over 50% of my portfolio is mean reversion, because it is working very well in this market environment. And in my portfolio, mean reversion will have very good portion. But if we will go to the bear market, and if we will start the new bull market, I'm pretty sure that I will switch in my portfolio, and most of my portfolio will be in trend following, because it will be the best time for this kind of strategies. And this is only my opinion here, and my way of constructing and balancing my portfolio. If we will combine these strategies, only two strategies together, I'm using now over 20 strategies, okay, in my portfolio, and we are taking only these two. We are getting better results. We need to know, unfortunately, and this is, I hope some people from the development team are hearing us now, that StrategyQuant is not showing us the open drawdown in the portfolio part. Sorry for that. The StrategyQuant is showing us the open equity. This is the red one, and you can combine the strategies and see the red line. This is the real composed, let's say, open equity chart. But I know that the team is working to unblock also the information about the open drawdown here and down in the portfolio. Okay, but I can easily count also what is the open drawdown from the open equity, by the way. But if we compose the strategies, we will get better results, and this is a general conclusion of this exercise. And I can tell you that if you add more and more and more strategies to your portfolio, you will split the capital. For example, not 100% to one strategy, but 50-50, like in this example. You will get better and better results. And this is the answer, the check answer. if there are some people are becoming friends in Czech Republic, is it true, Cornel? They are drinking beer. In Poland is the
true.
same way.
As we
I
did
can
in
tell you
Prague,
that-
Michael.
Yes, and I can tell you that that this is in my experience, mixing these two approaches is very good and very powerful way of taking the best of the both worlds. Okay. The question is this the best I can get? Okay. Is the let's say 12 or 15% CAGR is the best? We will publish this strategy on my website algohub.com tomorrow, and this is the Bitcoin strategy. Only 22% exposure, win rate 77%, almost 80%, and the red line, the yellow line, the yellow line is the benchmark. It is beating the market and working very well, and the CAGR is 45% or something like this. The triple B reversal strategy, using more capital, about 70%. Also reversal strategy, the CAGR is 20%, 21% in the historical backtest. Okay. Then in general, I can tell you only that this is the starting point in my experience. My recommendation is to experiment with different entry-exit logics. My recommendation is to experiment with the ranking methods and don't focus only on entry, because every one of us is at the beginning how to enter, and sometimes how to exit is more important, and how to rank stocks is also more important than the entry one. Okay. And definitely the best system is the one you will develop. Okay. Not I'm developed for you or somebody will develop for you. The best one is the system you will develop because you will trust it. But the real system, in my opinion, is the portfolio. Not single strategy, but the portfolio of low correlated strategies is the system, is the system. Okay. We need to focus on this target. And that's it from my side.
Okay.
Great. So maybe we can follow with you. Thank you, Michael, for great presentation and in-depth research about those two systems. And I'm looking forward to next live session when we'll maybe add this hedging strategy or something else, because as you told, they can really improve the portfolio. And there are some questions still waiting. So, so maybe I will start with the first one. Michael recommended Alpaca broker. What are the pros and cons of the broker, please? So, Michael, can you?
Yes. From practical point of view,
summarize the broker in few.
First of all, when I'm considering the broker, are your money safe or not? You're using this broker. This is the first question I always get to my mind. Okay. And Alpaca is definitely is not so known broker like, for example, Interactive Broker. But go deeper and you will see that the broker is growing very fast. It is having huge investors inside. Your assets are fully insured up to $1 million, as I remember, or 500 at least. Of course, this is a regulated, fully regulated broker, US broker. And please check this part because I always check it. They are publishing their statements, financial statements every year, and I'm looking at the financial statements year by year, and I'm seeing that the Alpaca is growing very fast in terms of revenue and so on. The second reason why I picked Alpaca is because of very low costs. This is no cost broker, and this is first time in my history when I have so low cost in my trading. This is amazing for me because I can put to work many different strategies and I can open many trades at the same day and for no cost, almost no cost. Of course, there is always slippage, there's always spread you need to consider. But in my researches, and I did a lot of researches about this broker, you can find some of them on my website. There is very low cost broker, and this is broker focused on algorithmic trading and the API, and we can get amazing execution, very fast execution, of course, and well working API together with AlgoCloud. That's it. And I can connect this broker to TradingView and see all my charts using TradingView. And for live administration, it is very important for me to connect the broker and to see everything on the charts.
Okay, thank you. There was some question, but I already answered into the chat if AlgoCloud can be connected to the Dukascope. So the answer is no at this moment, but we are discovering some new ways how to connect more brokers easily, but it will be focused just on the stocks right now.
I can tell you from my experience, because I was using many brokers, about 20 brokers in my career. And Dukascope, also RoboForex and another brokers, are mostly brokers focused on CFDs, Forex, and some kind of this kind of stuff, okay? And this is totally different story, trading stocks and trading CFDs, okay? We did an extra live session about this topic last time. You can watch this session if you like. But in my opinion, if you will see what stocks and ETFs, real stocks and ETFs can do for you, you will never go back to the CFDs. And you will never go back to Forex. But this is my opinion. I was in Forex. I was the Forex trader 7 years ago. And after I discovered stocks and ETFs, this is only I can recommend. Please check it. Check the differences.
Yeah, thank you for sharing. There is one question from Libor. Michael, what kind of normalized metric in benchmark you use to compare between strategy and SPY?
We can go maybe back to some metrics here. I showed you the metrics, of course. You can see, let's say, some kind of recommended metrics in this comparison. Okay, on the right side, you have the drawdown, for example, return to drawdown ratio. But please remember, this return to drawdown is not return to open drawdown, but return to drawdown, to closed drawdown. Okay, and this is something I think it should be adjusted here. But I like to keep it simple, to keep the metrics simple also. I'm looking at this metrics I showed you, okay? Sorry for that. We can go back to the metrics. The CAGR, win rate, payout ratio, open drawdown, return to drawdown ratio. Okay, we can look at different metrics, many different metrics, and StrategyQuant have many different metrics included. But for me, return to drawdown is the one I'm looking. Is that to open drawdown, to be honest. Exposure, number of trades, and cost sensitivity. This is something I'm checking always and always. Again, okay. If I'm comparing to the SPY, of course I don't have all these metrics, but for example, payout ratio, I don't have the payout ratio in SPY. But CAGR, win rate, of course, the open drawdown, return to drawdown, I can compare.
Thank you. And there is another one. Hello, is it possible to use similar algorithm trading strategies in SPX, options, derivatives, call and puts, for example, 30 DTE?
I assume it is about, the question is about options and options trading.
Yeah.
No, it is not available now. And to be honest, I don't know technology and the platform is giving you ability to properly backtest the options strategies. I know there are some strategies. I'm not the options trader, but the concept you can backtest inside StrategyQuant can be not easily because of technical issues, but then can be implemented into options trading also. Okay, you can take the trade not using stocks, but the same concept you can use options. I hope in the future, but it will be not. I assume it will be not the future. The next year, maybe it will be not next year or next 2 years, but in the longer future, this concept could be also automated. But there is a problem with data and backtesting the concepts when using options. I hear it from options trader. Okay, options traders.
Thank you. There is one more question. Hi, wouldn't swap eat down the profits for the long-term trend following, or is there any broker without such a fees? I think we spoke about, but
you are asking about swap fees.
Yeah.
I assume this overnight fees. If you are trend follower and you are using the real market, not the CFD market, okay? If you are using Alpaca, for example, or Interactive Broker, or another broker is using a real market, not CFD, you will not pay swaps or overnights. The companies will pay you swaps. It is called dividends because you are holding the stocks. Okay, and this is the difference between holding the real stocks and holding the CFDs. In CFDs world, you need to pay for overnight trades, and this is definitely not the instrument for long-term trend following, because the fees will eat you. But if you hold real stocks, you will get the dividends, and all the metrics, if we are doing the backtest, are adjusted for the dividends. Okay, the equity chart is adjusted because we are using a split and dividends adjusted data. Okay.
Yeah. Thank you. There is one more question. Could you please elaborate a bit more on the use of the subchart in the trend following strategy? How is it exactly set up in the system?
Okay. I assume we can see my chart now. This is this condition and close subchart. Okay. And this is, you can easily to add something like this. For example, I can add here the third chart to the strategy. For example, I'm adding QQQ. Let's say QQQ is the ETF tracking Nasdaq 100. Okay, and I see two additional charts. Sorry, for some reason it is not available to have 3 charts. Okay, I never check it, by the way. I'm always using one additional chart. Okay, then I switched the chart number 1 to QQQ. Okay, but it doesn't matter. And now, if I'm adding any conditions like for example, close, I can pick now if I like to take the close price of the main chart of the stock or of the subchart. And for now, I'm checking, for example, on bar close, if the close price of QQQ is above, for example, exponential moving average, okay, of this chart. This is crucial, not of the stock, but of this chart, okay? Is it true? And we can take, for example, 200-day moving average, okay? And I'm checking now for the subchart condition of the subchart. And on any object here, for example, I can take the Bollinger Bands also on subchart, not only on the single stock. And this is a very powerful technique you can use, and you can look at different charts at the same time and take decisions make on this chart. Okay, what different instrument is doing, and we can place our orders based on that. Really powerful technique you can use inside your trading and inside your strategies.
Yeah, thank you. That's all for the questions right now. And maybe, Cornel, I know that you prepare something, so if you can show it now.
Yes, I'm sharing the screen right now.
Give me, before. Yeah. Yeah.
So for the action takers and for those who are interested in today's live session, I have special offer where you will get obviously the plan you sign up for, but up to this, you will get several example strategies which you can immediately test and explore. So for the upcoming 3 days on this page, which will be included under the video, you can sign up and you will get the bonus example sector rotation strategy, where the strategy is a bit different from what you've seen today. It's trend following, but differently is working differently. And so here is the one. The second was example gap overnight, which is based on some very well-known edge, but with some secret sauce, which significantly improve profitability. And the last one is pullback RSI, which is similar, maybe a little bit similar strategy what Michael showed today, but with any plan you choose, then you will receive such bonuses. So you are welcome, and we are looking forward to seeing you in this on board with algocloud. So that's the offer for today, and I think we are slowly heading to the end of this live session. So thank you everyone who joined us today. I'm glad that mostly all of you waited till the end, which means that you are interested in topic, and it's great. Thank you, Michael, for a very well prepared topic, and Thomas also, and all of you that you've been together with us. And there is something special preparing for the upcoming week. We are working right now with our team on a new AI lab. So I will just shortly, in a few seconds, describe. Next week, all of you will receive invitation for new AI lab where we will teach how to create strategies using StrategyQuant. But for the first time, we will use a language model, AI language model. You already know it's ChatGPT. So integrated this into StrategyQuant, and we will show you how to simply write some text and create a strategy. And this will be incorporated into whole workflow, how to create strategy. So this is what you can look forward, and this is the closest event which is waiting for you. So stay tuned. You will receive invitation into your email. And I think that's all. So thank you again.
Maybe one more thing. Cornell, today we just released new SQX 143, which is available right now on our download page. So feel free to test it and give us the feedback. The AI chat is already there, and next week we will include it into the workflow and show it how to use it in strategy development. So this is it.
Yeah, a lot of is happening now.
Thank you all.
In the company, and but we are also glad because we are building such positive community and working with wonderful technologies. So thank you for addition, Thomas. And I think that's finally all. If Thomas or you, Mike, would like to something more, then you can tell. Or
I can tell you only take the algocloud offer, because I really think you have amazing technology in your hands, and take and start exploring this topic, because it is big change. Something really big is happening in your hands, and you can be part of it. Thank you.
Thank you, Michael.
Thank you.
Okay.
Bye.
Thank you for watching. If you like these sessions, please give us a like or share it. And see you in the next Algo Cloud session.
Bye.
See you.
Bye.
Bye.